Hey there, Blockhead Traders. Here at Blockhead Traders, I must inform you that we are not financial professionals. Nothing we say should be considered financial advice. We offer our own thoughts and opinions to you, the viewer. We expect you to take these opinions, form your own financial conclusions, and make your own financial decisions. Today is Wednesday, December 6, 2023, and this is Blockhead Traders Weekly. In this week's episode, I'm joined by fellow Blockhead trader Viper XL 007, who is back from a slight episode hiatus. And in this week's episode, we are going to touch on two topics. The first topic is a quick update on one of the CHWY plays that I laid out in last week's episode for earnings. It is one of the ones that I took, and it actually did announce its earnings after the bell today. And so I want to kind of talk you through the continuation of that trade that I took on Monday, show you a couple of the moves and where we're headed. Then we're going to talk a little bit about following a strategy. Is that something that you can do, should do? And talk to Viper. I know that's something that he's been working on, and so we'll touch base with him on how strategies work for Viper. Before we hop to that, I want to give a shout out to our Discord, link in the description below. You can click that. Say hello to myself, Viper, some of the other Blockhead traders. Love to hear what you're trading. Love to hear what content you want to hear about. Also, you can find my trades at thetagang.com/sprocket888, where I post each and every one of my equity trades, the good, the bad, and the ugly. Lastly, you can pick this up in an audio-only format wherever you get your podcasts. If you can't find it there, let us know and we will get it there. But let's hop to this week's content. Viper, welcome back to the show. I know you were out for a while, then you came back, and then you took another small hiatus. Mostly it was due to holiday scheduling and my scheduling, and we just couldn't link up to make a recording at the same time. So welcome back.
I haven't been a hiatus on activity, and anybody that is casually following, we'll say, the crypto markets or Bitcoin knows that things are spicy over there in a good way finally. So there has been a lot of activity over there. I have been doing some equities trading as well. But yeah, just didn't have the scheduling lined up, but do have a report back as to an interesting thing I've been doing. We'll get into the mechanics later probably, but initially, yeah, I want to go over, after we get through the beginning here, go over what I've been working on as far as strategy goes, because I think there's an interesting takeaway that kind of goes to things we always talk about when opening trades here. So I'm excited to get into that.
Yeah, before we get into that, I know you haven't been around, at least on the last couple episodes, and so I kind of switched back to my bread and butter, and that's selling volatility and earnings trades. And so that's kind of what I was focused on and did a couple of episodes recording on. And I'll kind of pull up this one trade here that I had talked about on last week's episode. And I did two kind of earnings trades in there, something that I was eyeing. So what you see on the screen here is actually what I talked about in the episode as a potential for earnings. And the way that we approached the earnings last week, Viper, was I said, hey, I really like to short volatility and sell it. And I really went into kind of risk mitigation. So talking about the protection legs that you can add on to a trade, so you're not, selling naked strangles on the call and the put side. And so in this particular example that we had talked about, we started off with a naked strangle. We went with a 15 to 25 delta put and the corresponding same delta call, and talked about how much premium it would bring in. And then what that might look like if you added what I called a safety net into buying protection. And so I want to actually then jump over to what I actually decided to trade. So I went with the same methodology of the 15 to 25 delta. However, because I made the trade later from a different time from the recording, it's a fluid thing. And so your 15 to 25 delta represents different price points. So what I got here up on the screen is actually my P&L chart from the trade. Now, earnings actually happened after the bell already. So the volatility hasn't been updated on this. Actually, I'll leave the protection leg on here. but the actual price strike of where this is shows up. So at the close of the market today, this was trading around $19.30, I believe, CHWY. So it was not really in the middle of this strangle. It was more biased to the bottom. But if you remember in the episode, the volatility was heavy, heavy, heavy call skew. And this was one of the examples that I had mentioned. I said, this is why I trade deltas and not price differences. So I think the expected move was about $3 when I recorded the episode. And my put strike in the episode was roughly $3 downside from the current price. But the same delta on the call side was actually up, almost double that in the dollar amount from where it was currently trading. And that's because, as I talked about in the episode, there's heavy, heavy speculation on people buying calls. And so that really pushes a lot of volatility to the upside. So that indicates that the market sees risk to the upside, that maybe CHWY was going to get challenged. And actually in the episode, I talked about how when I typically trade, I don't like to put protection legs on because they kind of cost money and I'm really okay with assignment one way or the other. But I actually called out in the episode a special thing with CHWY because this is a little memey. A little meme shows up on Wall Street Bets. It's kind of similar to the same vein as like GameStop was a while back. And that really can rock you on the call side. So if for whatever reason this thing were to jump up, 30, 50, 60%, it would really just flatten you on the call side. And I'm not really okay with that type of assignment. And so I talked about a thing called a jade lizard where you can put protection on the top side. Now in the episode, I talked about how you can use your premium to pay for that protection and really make it risk-free, where this flat line actually comes up above your break even. I didn't use that because I wanted to collect maximum premium. So that when I put this protection leg on, I just went out on the call side until they were dirt cheap. And because the volatility was so high, I had to go out to the $30 strike. So I paid $5 for this $30 strike. And the idea would be is if this thing challenged up to this high side, one, I would be protected. Two, if we didn't quite make it, I could probably sell that back for a profit and then be okay shorting CHWY up here as a short assignment. So this is where the P&L looks like, but let's jump over to the chart here briefly. As we take a look at the chart, what I want to show you and remind you is this kind of green, this climbing line that went red to green. This is the volatility. This thing was really at the crux of what I'm looking for in an earnings trade. I have very specific criteria that I follow when I go into an earnings trade or really selling premium at all together. And I need that volatility to be at an extra extended height. So I want to be as extended as I can to the upside. And this was in the 98th percentile in the past year, which means 98% of the time in the past year, this volatility was lower than it was heading into this earnings. So that is a recipe of extra extended volatility. That's a criteria for selling premium. Two, there's a binary event today, earnings. Binary events tend to rapidly deflate that volatility. And so that's really what I was looking for. I was looking for, are we super extended and are we ready to violently contract is what I was kind of hoping to see. And so if I zoom in here, this is the daily chart, just seeing that volatility over the past year. But if I switch this down to like the 15-minute, you can see, we made it up almost to $20 intraday today. Then we closed around that 1930 mark, somewhere in there, and then earnings came out. And I honestly didn't read anything about the earnings. No idea what it was. The expected move of the option chain going into the close was $3, a little less than $3, like $2.95, something like that. And sure enough, we dropped down after hours, closing at $17.25, roughly right at that expected move at close. And that's a little different than where my strikes were. But, if I zoom in here, this call side is going to be absolutely worthless in the morning. With the volatility contraction, that will be a 100% winner. It'll be interesting to see what happens on the put side because I'm really close to that strike price of 17. So it'll be interesting pre-market if we start to rally, or if we really fall off and drop even further on the price movement. When you trade this stuff, you're really at the mercy, because I cannot trade these options until the market opens. It's just not possible. And so I'll be at the mercy of this thing moving around a little bit. Again, I'm okay with assignment. If I drop down here and I get assigned these shares, I will take assignment of the shares. I collected some nice premium on both sides, and that's part of the game. But ideally, I'll probably be able to close out both these legs right after open. I'll probably wait an hour, maybe 2 hours. That's really where that deflation really occurs. See what's kind of happening in the price action. My options expire this Friday, but I'm just going to close it out there for a winner there. Viper, I know you're, I don't know what your thoughts are here on some of my option trades when it comes to earnings. I feel they're kind of pretty mechanical. That's about probably the closest thing to mechanical that I do, as I have pretty strict rules as far as which ones I get in premium selling wise, what I've entered. I have pretty strict exit points where as soon as I can close out for 50% of the premium that I collected, that's where I take my money and exit. And I just go out there with the large numbers and try to hit as many of those things that fit that criteria. And statistically, my win percentage over the years is about 70% win rate.
I mean, can't complain with that, right? Like, that's what it's all about, is get the probability on your side, get the data to back up that probability, consistency and position sizing, and the rest writes itself. So I, like always, think it's interesting to take a look at the chart read versus the technicals and mechanicals that you set up. So let's kind of jump into that here. So a couple things that I see. Obviously, I mean, I won't do all of the bouncing around, but I mean, this thing is just down. But we don't really care about that with your earnings plays, because these are fairly quick in, quick out. So what I think is interesting is I did a little bit more, so that it wasn't quite as fast as this appears here, but I did a little bit of poking around previously, and I mean, there is not a lot to hold on to on this slide down, but there was a little bit of a level. I mean, on the 4 hour, it's a little more clear on the 1 hour, but there was just a tiny little blip here of a range that would be, what we need to gain to continue up to the upside. And then likewise, there's kind of one more little range right here. And so these are important ranges to me. As far as this top one is, like, I mean, you got to gain them all. So this first one, we gained it, but then we struggled with the second one. We were rejecting off of it. We lost it, and we slipped back below this first range. But we didn't put in a new low. I'll get to that in just a second. So what I think is interesting here is if we take a look at your probability of move, which is this box here, which let's just go ahead and make that some other color. So this was your probability of move roughly for the options trade. And what I think is very interesting is how the high side of the probability of move is perfectly to this level range here, which I would say because of the price action leading into this earnings, it's not likely to blow past that. Obviously, anything's possible. We're on a probability scale here. But we've obviously struggled with liquidity and resistance wall here that it's really not likely to blow through it at this point. But, it's possible to go back up here and test it and touch it. So interesting how that lines up so nicely and conveniently. And on the downside, it's a little outside the realm here of this actual low that the current local low that we have here. So that kind of, puts you, I like the play from your perspective as to what the mechanics of these earnings calls are. Cause like we said, every time, like, you don't care exactly what happens long-term, just stay within this range. And I mean, this range has been holding since September, mid-September, and end of day today, we were smack dab in the middle. So all of those things line up nicely. The last thing I thought was interesting from the more technical read of the chart is that what's actually happening here, if we kind of clear these back off of here, what's to me what's happening here is a reversal, and a confirmed reversal. What this V here was a confirmed reversal before earnings, and that is because we have this local low here. The move that made the low, sort of. I mean, I'm just roughly gonna drop this in here. The move that made the low started roughly right there. And so we have the local low. We gained off of it, which was important to do when you make a local low. You want to gain the move that made the low, which we did. We hadn't tested it yet because this kind of just blew straight through. So the higher highs were what was probable. We obviously got that. We also never came back and tested this move that made the low, and then obviously we just did that right here. So this is a reversal confirmation here, where if you were just straight trading it, not on this option stuff like that's a good entry right there. Now, if we look at what happened after hours, it's still interesting, but it's that's a dump right there. But it is most interesting that bam, right back to that level. So, I mean, after hours when the market opens, things will happen, all that kind of stuff. Like, I mean, it may not hold here. It may dump through it. Who knows? It's not really, you don't really, when you're doing price action, you don't really take trades based on these aftermarket moves. But I thought that was interesting that we came right back to that level. So on market open, it could snap back up or whatever. If so, all right, here's the last speculation I'll do. If on market open, we'll leave this on here in case we ever revisit this. Pre-market, it could come back up here, and market open could be above this swing low, or this higher low here on this current swing. And then we're still looking good for more upside. And better yet, you're done. And your trade is completely out of here. Who cares? We stayed in the bounds and all is well.
Definitely. I'm really happy with the trade. Like I said, I collected excellent premium on it. I total on strangle that I did was 92 cents that I collected, and I actually did a 10x strangle. So I got 10 of those things hanging out there. So I guess I'll either be closing out for a nice green thing, or if we just dump hard, I guess we'll be the proud owner of 1,000 new Chewy.
Better
shares.
get a dog or a cat. Well, get some cat food and order up some Chewy. Pump those shares.
Yeah. But anyway, Viper, I that's one thing that I always kind of talk about as far as repeatability, consistency. That's kind of been recently. We talked a while back that last year 22 was a pretty rough year for me. I didn't do so well. I also really strayed from what I call my bread and butter, and that's that high volatility, either earnings trade or the 35 to 45 days to expiration, extended volatility, not around earnings. And I kind of went back to that in 23, and it served me well. I track every one of my trades in a journal, and I have the rules around that. We went through some of that in the screening of the last week's episode, and countless ones before that. But I know you're kind of all over the place when it comes to trying this, trying that. But I think you're starting to maybe, I don't know, try to hone in on a mechanical strategy.
So there's kind of two things that have been happening the last few months. One was I'm kind of like version 2022 of you, where first of all, I don't know that I've ever had a bread and butter per se. I've acknowledged, I've understood different strategies, the earning strategies, all that kind of stuff. I've participated a couple times. But I guess some of the struggle that I want to highlight is why it's important to find what kind of clicks with you. And this is the royal you of anyone out there. Because like, I mean, doing those trades, like they would work. I understood them and whatnot, but like it wasn't something that, was, I don't want to say it wasn't exciting, but I just had a lot of insecurities around it, and I've talked before on previous episodes as far as like how the mentality of trading, just open shares, spot trading, kind of messes with your view of options and vice versa. So that kind of got in the mix and caused it to be a struggle of a strategy, because it just felt like I was forcing myself into a headspace that wasn't a natural fit. And so I kind of have wandered, trying to focus on that trading strategy, and, in the Discord, focusing on the charting and the TA and all that kind of stuff. And I do, on a high time frame, I do believe I have dramatically improved my price action charting skills. Let's say on, starting at the weekly chart, weekly, daily, 4-hour chart, in that time frame, the high time frame, and set up some really good plays. Just fundamental good charts. Took longs, took shorts, whatever it was. Had some big winners, and that felt good, and that was working. So that was as close to the bread and butter that I got. But where the problem would kick in is not knowing where to stop. And, so when you have these big high time frame chart setups, I would say they average to come around once every 10 to 15 days. Like, because we're on such a high time frame of the chart, you got to get the candles to close. You got to get them set up in the right entry position and all that kind of stuff. And that's why they usually, if you can have the patience and the focus to the discipline to get it set up, the probability is that there will be a good winner there. But then it was like, after getting that win, I would want to go again. Like, all right, let's do it again. So rather than waiting that 10 to 15 days or whatever, or finding another chart. I mean, this is talking like it's on one chart. That's part of the problem, is I should browse around. But instead of having the patience to wait or to go find a new chart or whatever, I would be like, well, if I zoom in, now I can be on a lower time frame, and price action works the same, which technically it does. So now I'll just do that. I'll zoom in. Let's hit some quicker runs here. Let's do, some day scalping or whatever. And then lo and behold, things start messing up. I start losing money because I'm not disciplined, and I'm starting to chase the money rather than have a disciplined structure, setting up a play, let the play run, close it, be happy with it, and, run it again. So that's been the struggle lately, is finding that balance of, even though that sounds like a struggle, that's still more interesting to me. That still feels like more of a natural fit. And it's kind of this gamer grinding mentality of like, I can feel my progression leveling up on the charting skill side, and that's exciting. And I like that feeling of gaining some knowledge and some accuracy on those charts. So I want to use that to my advantage, but I don't have the disciplined structure, like in this options play that we just called out. There's a clear disciplined structure of like this, that, da, 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 da. And I don't have that with the swing trading. And then a little bit on top of that, but still kind of like I just talked about, was the discipline of entry was very subjective. It shouldn't be. Like, it should be pretty clear. We talk about trading failures to failures, and that's the swing you're trading and whatnot. But part of the growth in my charting is I can really get in my own head about where the failure was and where the entry should be and all that kind of stuff. And that's where I've made a lot of progress, but it still felt very subjective of like, okay, even though I think I have a mechanism in place of, take a 4-to-1 trade, risk to reward, all that kind of stuff. It still felt, the entry felt very subjective, and the entry kind of determines the entire probability of the trade. And so that was part of the problem as well. So what I've settled on is a brand new strategy that like I said, we'll save it for New Year's episode, because I'm going to run this thing all the month of December. And I don't want to talk about the mechanics of the strategy until I have all the data to back it up as complete junk or success. Because I got to be honest, the first time I heard the strategy, I was like, this is kind of stupid. This is like a fancy coin flip. And that sounds stupid. Like, but whatever. But the reason I'm doing it is because what I liked about it was there is a ridiculously tightly controlled and clear entry criteria, which, as I just said, I've been struggling with consistency on the entry criteria. So this strategy has a very tight and specific entry criteria. It has a very regimented what you do when, based on how things start to play out. And then the only subjectivity in the play is when you want to take profit or put a stop loss on. There's some discretionary allowances around that. But I don't really, as weird as it sounds, I guess, I don't really struggle with that part, the taking profits or the stop loss. Like I said, the struggle was the entry and rigidity of that system. So more than anything, I'm running this as reps in the gym. You don't have to do it this way to get your reps in the gym. You can just chart a chart, and you could just throw lines down and be like, paper trade it yourself of like, I would have opened here. Let's see how this plays out. That's totally valid. But in this particular case, the strategy is intriguing to me. I'm using a small amount of capital for risk mitigation, and I'm tracking everything. Real quick, I want to jump over to how I'm tracking it, just to show the system a little bit here as to what I'm kind of thinking through here on this. So you can see the other rigid thing about this is you're supposed to do this once a day. There's a specific time, yada, yada, yada. Obviously, I missed a couple days. But basically what I'm tracking here is I want to track the asset that I'm doing this on, because it should be asset neutral, agnostic, even though I currently have been running it on the same asset. There are shorts and longs in this strategy, as there should be in almost any and pretty much any swing trading strategy. You shouldn't be afraid of shorts. You shouldn't be afraid of longs. This I'll get into when we talk about the strategy. But I'm tracking the capital that was put into the position, the ratio of the risk to reward. And you can see it started out a little low, very low, actually, a 1 to 1.76 risk to reward ratio. And that was, I wanted to start out soft, kind of ease into it, just while I got the mechanics nailed down as to, am I doing this right, sort of thing. So I don't know what the official, like the person I saw this strategy from referred to wins as R's, and I don't know what R stands for, but I decided I'm going to call it a risk unit. So this is cumulative risk units, because that makes sense to me. So basically let's go down to 1 to 3. A 1 to 3 ratio, as we've talked about before, means I am risking 1 unit, say $10. I'm risking $10 on the grounds that I stand to gain $30. So that's the risk to reward ratio. I'm risking 1 unit on the grounds that I will make 3 units. So my cumulative R's here is basically just saying, all right, remove 1 unit, because I put that 1 unit of capital up for grabs there. So my R, if I win, in this case, was 0.76 R's. My R, if I win a 1 to 3 ratio, I win 2 R's. And then if I lose, if I hit a loss on the trade, then I've I've deducted 1R because I lost that R unit. So this is an interesting data point that I think is important to have. Maybe not this exact wording or formula or whatever, but something to this degree I think is important, because you want to track not just what's my P&L, how much money did I make, or whatever. You want to track how much did I risk and how much did I gain, because let's think through the 1-to-3 ratio. If I get like these last two winners that I had, let's speak in the R terms. I have gained 4 R's through those 2 plays. So now, even if I take a loss, I have 3 R's in the bank. And that's an important way to think about your trading, is not what's my ratio, or not what's my P&L percentage and all this kind of stuff. It's what did I risk and what have I gained? Because that's why I'd like to get this up to a 4-to-1 ratio, but I don't know if the strategy will allow it. So I'm going to ride with 3-to-1 for now. But that's the idea behind the 4-to-1 ratio is, hey, every time you win, you've won 3 risk units that now on the next play, as long as you're being consistent, making the same sized entry, making the same, all that kind of stuff, you have those 3 risk units that you could take a loss and you're still in profit. And that is just all part of the ways that we push the probability of profits over a long period of time in our favor by having that consistency. So, I mean, as you can see here, it's working. This strategy is working. But like I said, we'll see how it goes for the entire month. I'm 4 trades in. The month is long. So we'll see how this holds up over time. If it holds up pretty well, then let's do a full breakdown and discuss it. I already have some ideas of maybe, like I said, initially I heard it sounded like a total coin toss thing. It still does, but there are some interesting reasons. Well, I'm implying reasons behind why some of the things it does. So I don't know. I'll give the month to think about that and make sure that I'm not just finding confirmation bias in noise here. But we'll see how it goes, and maybe we'll have a recap. We'll recap one way or the other. Whether I tell you about it or not depends on how much junk it is or how successful it is.
It's on the internet now. We're gonna have to bring it up and make sure you cover it.
So, but the main point I wanted to highlight was it's a system. And that's why I also don't want to talk about the mechanics right now, because I don't want somebody to come in, my hard hat's on. This is a hard hat area. I don't want somebody to come in and just start copying it and being like, well, this surely is going to work. He's doing it. The point I want to get across is the tracking, the logging, the journaling, putting reason behind the numbers that you're tracking, like what I'm doing with the R's. I don't know, maybe a month from now, I'm going to think this is a crap way to record it. But for now, I put some thought into it, and I want to track it this way because it's going to help me determine, without any bias, whether this was successful or not, tracking those risk units and all that sort of stuff. And then ultimately, even if it's crap, it's muscle memory. And that's why I'm doing it for the whole month, because I want to have that ingrained in my brain of there's a specific entry criteria. Even if I go back to the swing trading, there's a specific entry criteria. I don't see it. I don't touch it, and that sort of thing. So we'll see. That's a longer journey as to whether or not that pans out.
Yeah, no, I love the tracking sheet, especially the fact that you have parameters around that means something when you reflect back on, did it win, did it lose? You have some of your metrics in there as far as your risk to reward, for example. That's really similar to my tracking sheet, where I track what was the volatility percentile that you're in when you entered them, right? And over time, that's where I found that extended volatility, right? My thesis was short volatility. Well, it shouldn't matter when you go, right? You're going to short volatility. You're always betting that it's overstated. Well, it turns out when I started reflecting back on it, I was finding that I had a majority, significantly more winners when the volatility was overextended versus just above, 30%, whatever the, mid range is, just saying, oh, it's above halfway, so let's take it. Really found a lot more success if you wait for that volatility to get to the extremes. And the only way that becomes apparent is if you have a tracker like that shows a large aggregate of data over time, and that data has to contain those sort of variables that you're sensitive to in what you're doing. So I think that's a great way to objectively track it all and then be able to reflect back and get some value out of that data. So that brings us to the end of this week's episode, really focusing on that repeatability, strategy, tracking, training, putting in that muscle memory, building that thing, and then reflecting back to say, does this make sense? Is this working? If it's not, did you capture the data on what you want to tweak? For me, that's that selling volatility and, updating on that CHWY play. We'll see how tomorrow shakes out. I took the DocuSign trade that I also talked about in last week's episode. Roughly that. I went with the 20 Delta strangle on that one as well. So we'll see that they announce after hours tomorrow. Of course, by the time you hear this, that will already be out. So, go to thetagang.com/sprocket888. You can just see how those things shake out for me. Viper is trekking down there on building up his muscle memory, his mechanics, the entry point. Like I said, being as mechanical as possible means all aspects, not just your exit points, but what trades do you enter? Why do you enter them? How can you remove all the different subjectivity out of that and get as much of an objective, mechanical way to enter again and again and again to track that. So we'll keep you updated on how Vipers goes with his discipline and trying to lock in a strategy here as he goes through December, trying to hit this thing every day. And, the year's coming down. We always talk, it's always mentioned in mainstream media and stuff, Santa Claus rally, is it coming? What's it going to look like as we finish out the year? We got tax loss harvesting, all that fun stuff. Hopefully you're finding things to trade. There's a lot going on out there in the market, and always remember, think outside the block.